Well, Dan, it's that time of year. Bank of Canada gets together, they hum and haw about what they want to do, and for the first time since 2018, they decided to change the rates. Went up a quarter point.
Yeah, we're at half a point now.
Yeah, half a point. Doesn't sound like much, but considering in 2018 when the pandemic started, it was at 1.75, right?
Yeah.
And then to kind of offset the pandemic, help the economy, they slashed the rates, right? It went down
Right
to
down
a
0.25.
quarter point,
Yeah.
and now it's up to 0.5. And that's got people wondering what's the impact of the Bank of Canada changing its rates, right?
Well, there's a couple of banks, and I won't mention them, but they've increased their rates today already as far as your variable rate goes.
Yeah, and that really gets into what we want to
Yeah.
mention to you guys is to understand the Bank of Canada interest rate. There are two things that can be impacted when buying, and there are short-term implications as well as long-term implications, right? And that short-term is what you're going to talk about, right? The bank's changing their rates.
Well, yes, the variable will go up, and if it goes up by, say, a quarter point, and if you've got a $700,000 mortgage, that's going to be an extra $65 a month to you.
Yeah.
It doesn't sound like a lot, but they are talking about maybe 3-4 more increases this year.
Yeah.
If that happens, that's an extra $270. So affordability does become an issue then.
Yeah, it becomes impacted, right? And that's something to take into consideration when you're looking to buy, and it might make people feel a little urgent, create some urgency for people that they want to pull the trigger, because the long-term implications of the Bank of Canada increasing their interest rates is the stress test, right?
The stress test, well, every buyer has to do the stress test, and right now it's at 5.25%, but that can change as well.
Yeah, and just for clarification, the stress test, because I know this is something that I was chewing on to understand properly.
Fair enough.
The stress test is kind of the top of your interest rate that a bank will put against you to understand what you can pay, right?
You have to qualify at that rate, even though the rate that you're getting is much lower.
Yeah,
That way, if the rates do go up, you can still afford the house.
yeah. It creates some wiggle room potentially
Correct.
for yourself, right?
Correct.
It's like
Correct.
you're saying, stress test is up at
25.
5.25, and the rates just changed to 3 point.
Well, it depends. If you get a variable
Yeah, it
or
depends
a
on-
5-year fix is around 3, so it all depends. But if those rates go up, then they will look at the stress test and increase that as well.
Yeah.
So it makes it a smaller pool of buyers being able to afford certain properties.
Yeah, so this can really impact first-time home buyers, especially because they've been looking to get into
Especially if you're in a tight budget.
Yeah, it's only going to get tighter right now because of what they're doing. So it's important to take into consideration if you're thinking about buying right now. It's important to take that into consideration. There are short-term implications of the Bank of Canada changing its rates, and long-term it can make it even harder for you to get into a place. So
Always get a pre-approval from a bank. So
Exactly.
they'll freeze that rate for you for 90 to 120 days. So if the rates do go up, you're still okay.
yeah, you got to protect yourself, and there's a lot of information to go into about this kind of stuff. So reach out to us, shoot us a message if you have any questions. We're here to make sure you understand what's going on with the Bank of Canada rates.
Sounds great. Thank you.